You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it's time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and general finance and sometimes even beyond, and attempt to pick their brains for the benefit of you, the listener. My name is Mark Longo, coming to you from the old Chicago HQ here for Options Insider, and looking forward to another great episode of our Charlie Rose for the options space here, our old Options Insider Radio interview program. And joining me is an old friend of the network, even though he hasn't been on in about a year. He is Jared Broad, the founder and CEO over there at QuantConnect. Jared, welcome back to the Options Insider Radio program.
Thank you, Mark. Good to be back. Good to be back. How are you?
I'm doing great. It's a little chillier probably here than where you are. It's snowing and about 20 degrees or so here. So we're getting an early taste of winter here in Chicago after a few years of being spoiled. Ironically, it's the year they said it was going to be a very mild winter. So it goes to, we've already had probably more snow this year than we had all of last year. So goes to show that they don't know what the heck they're talking about when it comes to meteorology. But we do know what the heck we're talking about when it comes to all things quant finance, which is why Jared is joining us here from QuantConnect. Jared, like I said, it's been about a year since you've been on, and we have a lot of new people joining the network all the time. So why don't you go ahead and give our audience a quick refresher. What the heck is QuantConnect? What do you guys do?
Well, QuantConnect is a website where you can design algorithms and then trade them on your own brokerage account. So we have a platform where you can enter code in Python or C# and run simulations or back tests across historical financial data in the equities, futures, options, forex, crypto, or CFD space. And when you're ready, you deploy it to your brokerage account. So we support a number of different brokerages, but for options specifically, it's Interactive Brokers, and you can do algorithmic options trading.
IB does seem to be more on the bleeding edge when it comes to adoption of algos in the options brokerage space. So it doesn't surprise me that they'd be on board with your platform. You guys also have interesting tiers available for a lot of our audience. So if someone's listening right now, maybe they're saying, "Hey, I don't feel like paying right away." You can just join the community for free over there. And of course, if you're a developer, you want to get on board with doing it or using these aggressively, you go all the way up to about $250 a month. Is that the pricing tier? Do I have it right there?
Yeah, so we have a community of about 65,000 engineers, scientists, financial professionals who use the platform, and it's actually completely free to use. You can backtest and design your strategies. We only charge for deploying to live trading to cover the server costs. So you can go live trading for as little as $20 a month, or if you're going to a Forex brokerage, it's actually sponsored and completely free. And we have an institutional platform for RIAs, for people who are managing investments for $250. Yeah.
I'm sorry, but you kind of answered my next question, but it's kind of always curious to me who the adopters of platforms are. First off, 65,000 people. It sounds like you have an enormous community over there. So congratulations. But also, it sounds like you just touched on it. Is it predominantly those people in maybe the tech savvy side of the space who are early adopters? Is it people who are on the bleeding edge of finance? Is it institutions? Who are the primary users of QuantConnect right now?
Yeah, it's fascinating. We're actually the largest independent community of quants in the world. The community ranges from STEM graduates, science, technology, engineering, mathematics, chemistry, physics, the teachers, the students, just anybody who has a passion or love for the markets and wants to automate their strategy. A lot of people learn to code to automate their strategy. And we find that they're distributed all over the world. It's a fascinating audience, and we're actually proud and humbled to work with them every day. They really challenge us as a team to be better.
Yeah, I'd imagine there'd be a pretty demanding audience out there. It's interesting. You talked about the users and who they are out there, but I'm kind of curious. Also, what are they trading? What's the algo of choice? Maybe what's the product category of choice? We like options, but I won't be offended if you don't tell me it's options. If it's algos on Apple, I wouldn't be surprised. But what is the predominant thing people are out there really trading, using the algos to trade right now on your platform?
Predominantly, it's U.S. equities, but
kind of like broad index type things.
People do a whole range. It's very hard to classify what the community is doing, to be honest, because everybody's so different. But it's universe selection, so running an algorithm to pick. To do stock picking, say, based on fundamental analysis, or, looking for the top 5% movers from yesterday and trading on those, or doing broad indexes and trading on a basket of ETFs and indexes, all the way down to doing sort of medium frequency trading, intraday trading on individual assets. It's a fascinating crowd, yeah.
And of course, we do have options in the name and a lot of options traders in our audience. So I'd be remiss if I didn't ask you about that specifically. What are some of the big, options and derivatives oriented algo usages you're seeing on your site? Is it similar, analogous to the equities, maybe some basic correlation plays using options, or is it more advanced? What kind of things are you seeing on the platform?
People use it as a hedge for equities, so they can be buying options when they think the market's about to change, or they can use it for leverage if they've got a strategy that they're currently implementing with equities and they want to level up. They can implement the same thing on options. It's a fascinating problem space, is because with options you're really empowered to make much more complicated and lower risk investments. So it really attracts a more sophisticated quant who can understand the different types of option strategies.
That's true. You're talking like several layers of abstraction there. First, you have to be, savvy enough to be a quant in any product, but then, of course, you have to have added on the layer of understanding options and derivatives. So you're talking multiple Venn diagrams have to intersect to get that one guy out there who's slinging the options and derivatives oriented algos. Since we're talking algos, I'm just kind of curious. This is obviously an interesting time in the marketplace. This might be a challenging question for you because you have so much stuff going on the platform and they're all doing different things things. Maybe there is no one broad consensus, but I'm kind of curious. We're getting asked a lot here from a lot of our, broad audience, what are people looking at in terms of the market, what they're thinking in terms of valuation. Obviously, the equities have sold off quite a bit. Most of the year for the U.S. markets, at least, has pretty much been wiped out. We're kind of starting from scratch again. I'm kind of curious, have you seen or noticed any broad trends or consensus amongst your community or amongst the algos? Are they starting to pivot towards buying equities maybe aggressively at these levels? Are they still not kicking in mass? Have you noticed anything in the aggregate that might be of note to our audience?
Well, the beautiful thing about algorithm strategies built well is that they're fairly, they don't really care about the market direction. They tend to profit. They can either be sort of volatility seeking or volatility avoiding. And whatever your strategy is in an algorithm, it will work in those market conditions. So I'm sure there's a lot of very happy algorithmic traders about just the increase in volatility in the last few weeks.
Yes, certainly pleasing a lot of people in our audience out there as well. And I'm sure a lot of the algos you work with and are on your platform are probably much more short-term focused. So the broad level of valuation for the indices, maybe not a big driver for them going forward. But still, it's interesting to see whenever you see aggregate for that number of users, kind of what they're up to in the aggregate sense, I think is always fascinating. Maybe you guys can publish some indices of the QuantConnect indices. Here's what our algos are looking at aggregate right now. Oh, they're broad buying equities. There's buying volatility. That might be an interesting and informative thing. Just giving you a little nugget to chew on here after the. If you don't have enough work already, I'll give you some more before the interview is done here, Jared. Well, obviously, it's been a while since you and I have chatted. It's been about almost exactly a year. I think a year and change. I think for last FIA Expo was the time you were in town last time we had a chance to chat. So obviously you've been working on a lot of stuff. I think first off, kind of interestingly enough, you're kind of beaming to us from a new location. Obviously you're not in the studio with me right now, but you're based in New York. You recently upped ship and you moved the whole team out to Seattle. What was behind that move? Are you trying to create the quant finance community out there in Seattle?
Yeah, we were about 5 years in Brooklyn, New York, and we love New York.
You just got tired of the hipsters. You can tell me. It's fine.
The hipsters bring great coffee and great food. So no, it was just a time for a change and thinking about where we see the company in the next 5 and 10 years, and the Seattle environment with its water and its mountains and forests. It's just a really great place to build a company and build a team. And so we got a lease here. We just got a new office right above Pike Place. We've got a view of Puget Sound, and we can see the boats coming in and out all day. Watch the seagulls. It's really a beautiful place to work. So we can do very, very creative and be highly productive here. It's quite exciting.
You're doing the opposite move of Amazon. Amazon's looking to get the heck out of Seattle, right, and move their headquarters, at least establish new headquarters elsewhere. You guys are going right into Seattle and saying, we'll take over all your space. There you go. You guys are that big now, right? You can take over 50,000 plus people space there in Seattle. I like that idea. Maybe if you brought your whole community maybe to Seattle, then you could definitely take that over out there. Well, speaking of community, you guys have been working on a lot of cool stuff over there at QuantConnect. Sounds like you guys have really been putting a lot of effort into this new Alpha Streams offering. Tell us about that. What is that?
Yeah, it's been a fascinating year. We've always had a lot of pressure from institutions, from funds to access the QuantConnect community. And we've always been fiercely closed and just focused on the quant and how we can best serve them. So we reached a critical point, I think, in the last year where we've got this enormous community with millions and millions of algorithms, and we were thinking how we could best serve those quants. And so one of the ways that these engineers and these quants, they want funding and they want to get their ideas out there. And so we thought about the whole institutional investment process from the ground up. If we were to redesign investment today, what would that look like? And basically what we came to was all of investment comes down to placing a trade. You raise money, you manage people, you get offices, you build logos, but all of that's kind of irrelevant. The only thing that matters is you've got a trade and you assign capital to it and you manage the risk and you get out of the trade. And when you distill it down to that, that's what alpha streams is. It's imagine if we took all of this process of finding a quant and researching and finding alpha in the market and distilled it right down to the signal. So alpha streams actually allows funds to search the community and to find algorithms all via API. And then when they've found an algorithm that they like, they can license the signals from it in real time. And the whole process is seamless, and you can license the algorithm in less than a second, and you'll start getting streamed the real-time predictions of that algorithm. So it really distills the entire quantitative industry and searching for alpha and researching alpha down to your results.
So I'd imagine there was a lot of issues, like you mentioned, with funds coming in. They don't have a lot of time. You have an enormous community, like you said, millions of algorithms. Kind of hard to parse through all of them, maybe for the ones that are most suited to what they're looking for. So it sounds like this kind of enhances that discoverability on the platform, makes it a little bit easier, maybe streamlines that a little bit, and also for your creators, for the quant creators, it allows them to have an enhanced source of revenue. Is that kind of the thought process behind it?
Yeah, we're really excited because it means that all of these creators from all over the world will be able to get revenue for their ideas. So when a quant designs an algorithm, they assign a price and then they put it into the marketplace. And then funds can search it, and when they see an algorithm, when they license it, the quant gets paid for his work. And through the API, the hedge funds can search and filter and find algorithms that are applicable to them. So it's really the best of both worlds.
So previously, it was more designed around the about the users coming in and paying and trying to license these funds, and people would effectively upload their algos maybe as a sense of shared community and helping to work together on a certain area. But now you're adding that revenue stream, perhaps as an extra carrot out there to develop even more and even better algos. Yeah,
previously. Only about 1% of people shared their algorithms to the community. It was always about 99% of people kept their algorithms private, as you'd expect. If you put all that work into designing an algorithm and you're trading it, you wouldn't want to share your IP. But this way, for example, an individual might not have the capital to fully utilize their algorithm. If they put it out there to a hedge fund who does have the capital and resources and the team to be able to fully utilize that strategy, the quant can earn far more than what they could on their own.
That's a good point. Someone could push more capital behind through that algorithm than you can. Then you're right. Then the utility to you just went up, because if you can only put $10,000 or $100,000 through your algo, maybe it's not going to generate the returns you need. But if someone could come in and put millions or perhaps even more through your algo over time, even a small percentage of that will probably be worth more to you than just trading it on your own every day.
Right, and because it's based on an API and it's all searchable and you're building a track record in real time that we log, it essentially turns the algorithm space into a pure meritocracy. So people are measured purely by their results. And if you've got a great algorithm, you'll be rewarded as such. All of the old school ways don't really apply. It doesn't matter what school you went to or what country you live in. If you can have a great idea with a great implementation in your strategy, you'll be able to get licensed and judged based on your algorithm's performance.
And can any member of your community, can they participate in this alpha streams? Is there some sort of selection process? Do you have to qualify first? Maybe the top tier of the community producers qualify for the alpha? Is there any sort of, layer of processing you put there to keep everyone from joining into the alpha streams? Otherwise, that might make it, again, hard to discover the good stuff again, right?
No, that's the beauty with a search API. It's just like Google. Even though there's 1 trillion pages in Google, it's easy to find what you're looking for. So you have to apply and into your educational and your employment details, but there's no barrier or costs to becoming an Alpha Streams contributor. But purely because of the ability of the API to search, we're able to quickly distill down to the core of what people are looking for.
And have you seen a lot of adoption for that platform so far?
Yeah, no, the response has been phenomenal. The current challenges that these hedge funds are facing when they compare just searching an API to the old way of finding a recruiter, interviewing 100 candidates, putting out a bunch of job offers, negotiating those offers, recruiting that person, and then spending 6 months researching and trying to find an idea or an algorithm. When you compare that $1 million expense to simply going in and searching and finding people who have proven themselves already, it's a very, very warm response. So there's a handful of funds that are investigating the platform, but the one that we can disclose publicly is Tibra Capital. They're an international proprietary trading fund, and they work on all asset classes.
And speaking of that developer's mindset, someone might come to your community, they may have an interesting idea, they may have an interesting understanding of a particular marketplace, but maybe they don't have the development or the quant background necessary to build the algorithm on your own. I know you have the community over there to try to help people do that sort of thing, but I think you've also established an interesting framework out there to help people maybe just plug and play with certain modules now and be able to maybe help assist in the development process. Has that been a big focus for you guys over the past year?
Yeah, so about 6 months ago, we launched what we call the algorithm framework. So when you go to design an algorithm, we found that people were repeating the same mistakes or worse, repeating the same work. So the same work was being repeated over and over again by different people, and it wasn't alpha producing work. It wasn't really productive. It might just be the mechanics. And with Lean, with our open source project, we were really striving to eliminate all of the pure mechanics or all of the data feeds and all of that mechanical work that we thought would be better done once and then reused. So with the algorithm framework, we've actually built this way that people can plug algorithms together. They can take existing pieces of those that foundation and reuse components that people have made in the past. So the core modules are the universe selection, alpha creation, portfolio construction, the execution, and the risk management. And so each of those modules, so for example, universe selection, selecting stocks which are in the top 5% performers from yesterday, or selecting options which are a hedge on my current portfolio, or selecting all of the assets which had a low price to earnings ratio. Like those are fixed formulas that you only need to write once, and it can benefit people over and over and over again. So we're excited by the framework because we can write those modules, or the community can write those modules, and it's just going to make everybody in the community more efficient.
Makes sense. Why reinvent the wheel if you don't have to, especially for someone who comes in, like I said, and they're more experienced on the financial side than they are on the programming or development side. You don't want to limit it to not to have those people be able to participate either. So being able to open the door to those people, maybe have them plug and play and then tweak to what they particularly want to do. That sounds like it's a much better way to make the community expand to those next tier of people outside of the immediate quant community that you guys have clearly carved up already. You mentioned Lean. I guess we should touch on that. Lean is your core underlying engine that all the algos are executed on, correct?
Correct. We open source Lean about 5 years ago, and it's a open source platform. The core of it's in C#. You can write algorithms in many different languages on Lean. It allows you to do all of this back testing and live trading entirely locally on your own server. So if you've got data, or if you want to run this on your own cloud environment, or you're starting a hedge fund and you want total control over the back testing platform that you're using, you can just go and download Lean, and it's totally free, open source. You can edit the code, make your own user interface, and build it to how you need. Really, the open source project is based on a community. It's about algorithmic trading engineers with a shared passion for the space coming together and building this engine that everybody can use. And it's completely separate to the alpha. So your algorithms are safe and closed source and on your computer, but you can just use it like you're using roads, just like you're driving your car on a road. The roads are completely free for everybody to use.
That's a good analogy. I like that. And it sounds like it's resonating with people. I was looking at some numbers recently. It looks like over $1 billion has changed hands using Lean over the past year. So it sounds like your approach is resonating there, Jared.
Yeah, it's been exciting. We actually never were trading, tracking the volumes. So we just started tracking the volumes, and it was quite exciting to see all the different people trading and using Lean. And we're really excited by that. So we're going to keep working hard and making it better for the community. And we've got brokerage connections to interactive brokers, Coinbase, Oanda, FXCM. We recently just added Bitfinex and Binance and Alpaca. Alpaca is a free algorithmic trading equities brokerage.
Yes, I have heard of Alpaca out there. It's interesting. When we touched a little bit about this last time you were on about a year ago. But whenever I have someone on in your space, it always kind of interests me. One of the big topics, particularly resonant, I think, to a lot of your audience is, of course, the market data side. If someone comes to you, let's say they're a fledgling quant, maybe they're a high-end, sophisticated retail trader. They've developed a little bit of what they think will be a useful algo for them. But now what do they have to do? They have to go develop it. So you have the modules on your site, but they also have to go and back test it and test it against a broad array of framework and historical data. And that's where a lot of times they run into roadblocks, because that data, market data, is not cheap, as we all know. And the more you need and the more specificity you need and the more products you need, the more expensive it becomes. So that's always been a big stumbling block. It's one of the chief complaints we see for a lot of startups coming into the fintech realm, and they come into it with a typical maybe tech mindset where data should be freely open and available to everyone, and then they encounter the closed silo world of finance and trading and exchanges, and they realize it's a different game and they play by different rules of engagement. So it's been kind of fascinating to watch this kind of push and pull between the, let's say, the established players in the market data realm and the new upstarts trying to push and pull and make data a little bit more available. Obviously, it's something that's near and dear to you guys because this is an issue for a lot of your community. What are your thoughts on the evolving costs of market data out there? Is this something you guys are working on to try to maybe democratize that more, so more people in the QuantConnect community can be able to access and develop and back test their algos without having to pay an arm and a leg before they even know if the thing works?
Yeah, it's absolutely a challenge for startups, and even established hedge funds are paying fortunes in data licensing costs. There's not much we can do from the point of view that the exchanges have the monopoly on that. But what I am happy to see is the success of IEX has been really great to see. So IEX have bucked that trend, and they've made their data open and accessible, and you can go download it in bulk form. And it's not actually. I think it's maybe 1% of the total market volume right now. I don't know the exact number, but it's a tiny fraction, and it's not quite representative yet. But if that trend continues and exchanges are able to find business models outside of selling their data, it'll be really great for the finance industry as a whole. Because it will.
I'm sorry, that certainly would be an interesting development. I mean, you mentioned, though, you have such an enormous community, 65,000 plus participants. Can you not leverage that at QuantConnect? Go to a market data provider and say, hey, we're going to buy, obviously, more data than your average user. Maybe you can give us a volume discount. Nothing like that going on at QuantConnect?
That's kind of what QuantConnect is doing already. So QuantConnect pays the data licenses that are required, and we're able to aggregate that cost and share it over the community. And so it's not quite as free as if you just bought it directly. So if you go and buy it directly, you're able to download it to your computer and use it as you like. But when you're using it through the QuantConnect website, you're not able to download it. So you can run your back tests, you can do all of your simulations, but you can just see the results in the web browser. And it's just a factor of the industry today. And we have built technology to let you instantly download the data that you need for a back test using the open source project. But because of the licensing restrictions, we're only able to enable that technology for foreign exchange.
That makes sense. You know, I'm glad to hear you guys are offering that sort of leveraged access, and it makes sense. They can't download it, but at the very least they can do, and they could test it on your platform and see the results there. So that's a good thing to see that people can, because obviously you're right, that would be a huge stumbling block to anyone looking to set up and establish an initial algorithm to sink thousands, maybe tens of thousands of dollars just into market data or something that they don't even know if it works. So that's certainly glad to hear you guys are democratizing that a bit. On the QuantConnect side. You know, since the last time you were on, Jared, we've seen this effectively what has become the crypto revolution. You know, we saw exploded really in Q4 of last year, certainly on the radar of a lot of people in our neck of the woods, the derivative space. All of a sudden, crypto derivatives became a thing. We saw the listing of the futures over there at CME and CBOE. Then it kind of went quiet. We since have seen, in terms of new products anyway, not quiet in terms of interest. We have, of course, seen Bitcoin move from 20,000 down to, I think it's somewhere around 4,000 right now. So that's been kind of interesting. You kind of mentioned you have crypto on your platform. Has that been a big driver of interest for you guys over the past year? And also, B, kind of related to that, have you seen any change in that as crypto has somewhat fallen off in terms of price over the last, let's say, 3 to 6 months?
Yeah, let's say crypto stabilized in price over the last 3 to 6 months. There you go.
That's a more euphemistic way to put it. I like it.
I wouldn't say we've seen a drop-off in demand. I do see it as a stabilization. So the same people who were starting crypto funds before, they're still pursuing those funds. They're still, when I mentioned before, Bitfinex and Binance, those brokerage connections, those exchange connections are entirely driven by the open source. So those, that's a hedge fund in Russia, in this case, who's written the code and is submitting it to the Lean open source project as a way for them to empower their hedge fund. And so they're just contributing it back to the community because they're deriving a lot of value from the Lean project. So if that continues and we keep seeing the open source contributing this work, I do believe the crypto world's got a long way to go. Yeah, I mean it's a stable market and it'll as the technology matures in the exchange space and the Lean open source project becomes better and better for doing crypto algorithmic trading, I can only see the space improving.
You know, it's funny, the few people who have approached me about using some of their, let's say, technical or other types of modeling on crypto, they've all reported to me that it actually works better on crypto than it does on, let's say, illicit equity or things like that, which I think is surprising at first when you also hear that it's not quite as crowded or as there's not as much noise to the signal in crypto as there are in other products. That seems to equate, at least from what I'm hearing anecdotally, to better performance, which is kind of interesting. So hopefully that'll translate. And certainly I know from our neck of the woods, we're looking forward to having more products. And having listed futures is nice, but having, maybe, let's say, some options on those futures would be nice. And then, of course, more broad arrays of products for our audience to trade and, of course, for your users to generate algos on. That would certainly be a good thing, I think, for all of us at the end of the day, Jared.
Yeah, no, absolutely. It's more volume would be great as well.
Yes. Can't turn your nose up at some volume as well. Well, Jared, it's kind of been a nice broad-ranging conversation here. We touched on, of course, what you guys are doing on the alpha side, what's been going on the platform with Lean and the algo framework, and all the money actually being traded on the platform, which is good to see. The growth of the community, market data, a lot of even crypto. It's been a broad-ranging conversation. But that said, if there's anything else that's happened over there at QuantConnect over the past year, maybe you want to give our listeners a little bit of an update on. Maybe you want to leave our audience a little bit of a hint, a little bit of a tease of what they can expect from QuantConnect in the coming months. Now is the time, sir. The floor is yours.
Well, we have some fairly ambitious plans for the next year. I suppose a tease would be international expansion. I'll just leave it at that. So we've got a number of different challenges that are coming ahead, and we're going to be recruiting very heavily for them too. So afterwards, reach out. Let me know if you're a C++, Python engineer, and you really love hard work, hard challenges. We certainly have boatloads of challenges ahead of us. So, yeah. Thank you very much, Mark.
So Seattle wasn't enough. Next step, conquering the world, for QuantConnect?
Absolutely. There's a lot of other countries out there with very, very liquid markets, which we hope to explore.
And if people are interested in learning more about the platform, about the alpha streams or the algo framework, or maybe they want to reach out to you about the careers you just mentioned, where should they go? What should they do, Jared?
You can reach us at QuantConnect.com, and all of our jobs are posted on our LinkedIn company page. So if you can check us out there, or reach out to me directly, Jared at QuantConnect.com. I'll be very happy to respond.
Well, Jared, we're happy to have you on. Glad to hear things are going so well over there at QuantConnect. We'll have to check in again, I should say, in the coming months to see how all of these new developments are playing out in the marketplace, sir.
Awesome. Thank you very much, Mark.
Thank you. And thank you for tuning in. We'll look forward to having you on. Join us again very soon for more episodes of Options Insider Radio.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.